Hello everyone, welcome back. Hope you are all doing well. We've got the dream team assembled again for you, Josh and Neja. Josh, first of all, how are you?
Doing very well, thank you, Sam. Doing very well. How are you?
Yeah, not bad. It's been nice weather, to be honest, last sort of couple of days in London. Not necessarily warm, but nice. Tomorrow, however, Thursday the 20th of March, for those listening, hotter than Ibiza, they're saying London is going to be. So sign me up for that. Sign me up. Neja, how are you?
All good. Actually, I saw that there was a good weather in London on Sunday when I was watching Arsenal match. Can you imagine? And it was raining here, and it was sunny in London, and I was confused what's happening with the weather.
What I would say is it was sunny, but in the shade it wasn't hot. And I
Okay.
made the mistake of just sort of going to the game thinking, yeah, blue skies, it's going to be fine. And I was in my seat just like shivering for the whole game. But
Can we just go back a minute though? Sorry, did you say you watched Arsenal?
Yeah, but it was a coincidence. I was at my friend's house and they were watching a game and I was just watching with them and I was watching Arsenal. And because of you guys, I think I have to start watching Premier League, right? And Champions League, I have to start following these things.
yeah, I think you do. I think it's a worthwhile thing to do. Let's get into our topics where we've got the Fed rate decision. We've got Nike or Nike, depending which way everyone wants to say it. And then we're going to talk a little bit about equity inflows as well. Jerome Powell gets the troops together later today, UK time 6 p.m. and then 6:30 for the press conference, Josh. What are we expecting heading into it?
Well, to be blunt, don't expect a rate cut. That's just going to be very simple, right? Out of the blocks, to be honest. That's it, done, and the podcast. Look, that's just being very simple. Looking at some of the numbers today, there's basically less than a 1% chance that the Fed cuts rates this week, and I think going back and looking at what the Fed has done and followed markets, I think they've done pretty much everything the market has priced in for over the last 10 years. So if we get something that's that it isn't a hold, then again, it's going to surprise the market, and we're going to see some big moves. Some lots of volatility. That's for sure. Why aren't we going to get a cut? Well, look, firstly, we're not going to get a cut because there's this sort of angst a little bit over tariffs. Obviously, the first thing, this idea that inflation is going to sort of rear its head again. That is coming, though, after US inflation actually came in lower than expected in February. It fell from 3% in Jan to 2.8%. And look, I think that's, a big number. And that was pretty positive. US stocks sort of rallied after the report. But again, what we're sort of seeing is this sort of uneasiness is this idea of the sort of the trade war, because obviously we spoke about tariffs quite a fair bit, and Trump is obviously pushing through them, and he's sort of remaining pretty strong on his word with that. Ultimately, tariffs, will make products more expensive for Americans, and the Fed is obviously going to be on watch for that, right? And we're probably going to get more evidence of how that's going to affect the US over the next few months, how it's going to affect businesses, and ultimately the Fed are going to obviously then react to that from there as well. So I think if we do continue to see the trade war escalate, if we do continue to see economic data sort of come in as it has done, which has sort of shown that we may need to keep rates where they are because we've got a very, very strong US economy, the view of rate cuts for this year, being none remains a pretty real possibility. So that's important to sort of remember as investors, especially when we're looking towards the year ahead. But looking towards the back end of the year, the market is still pricing in a couple of cuts. So that's pretty key for investors to sort of keep an eye on as well. But Jay Powell, our good friend, he's indicated that the central bank can afford to be patient when adjusting their interest rates. And as I say, that it comes back to Trump and the tariffs, because we don't know that effect that it's going to have. But as I say, it's pretty safe to assume at this point there's not going to be a rate cut until at least the second half of the year. But also at the same time, it is quite interesting, right? Because Trump has also been pretty vocal about rates being lower. So I think it's going to be a really interesting time, especially for Mr. Jerome Powell, because he hasn't got the best relationship, as we know, with Trump. They've had a bit of a mixed relationship over the years. So look, it's going to be interesting more so from a commentary perspective. It's going to be a nothing event in the sense of we know it's going to be a hold and rates are going to stay where they are, no cut. We're looking for that commentary from Jerome Powell to sort of see what he's saying and how he's seeing things. If he does mention, tariffs in any way, if he does sort of talk about that lower than expected inflation report as well. So yeah, the pressure is going to be, what we're looking towards for sort of future guidance, I guess.
Yeah, because obviously we are not expecting any cut at all, but comments, can you imagine those comments on tariffs? And since they don't have the best relationship, that could really impact the market. And we saw yesterday wasn't the best day for the markets again, especially for those big tech companies. I'm wondering if any of his comments can change things around, at least on the short term.
Yeah, it's going to be an interesting debate that, but also just having a quick look, Josh, you're mentioning about the probabilities, and I was just looking at the December meeting. Obviously, so much can change, but at the moment, there's a 4% chance that there won't have been a cut by that December meeting, essentially. But we go back to a few weeks ago, that odds would have been higher. We go back a few weeks before that, it would have been a lot lower. So it just goes to show how quickly things can change, and obviously Jerome Powell's going to be on the well, receiving those questions. He's a pro though, isn't he? When you think of people that are ahead of central banks, he's the man, isn't he, Josh? He's not gonna like blow the market up, is he?
No, he's definitely not. Like you say, he's been doing this for a few years now. He's fended off Trump a few times, isn't he? And look, to be honest, if we speak about Powell a lot, right? Like I said, he's our mate on the podcast. If you're listening, Jay, just give us a shout out, mate. Your next presser, digest and invest by eToro on all podcast platforms. But I think the point is that he's actually done a pretty good job since he's been in charge. He's got arguably one of the hardest jobs in the world. And I think he's done a pretty good job. Look where we are. Look when he had to lift rates. Yes, maybe that 50 basis point cut was maybe had a few people questioning that choice, in that sense. But overall, I think, if we look at the markets over the last couple of years and how the US economy has performed, I think we've got to say hats off to him. He's done a pretty good job so far.
Yeah, definitely. He's been really straightforward on the point. He didn't change his mind with every meeting as we would expect from some other people. So I think that with that, he proved that he is the man for the job.
Yeah, and it's a thankless task, right? You can do 50 basis points, you could do 25, and you have some people saying they should have done this, should have done that, and that's a lot of that is in hindsight as well. Another thankless task has been being an investor of Nike over the last few years. It's taken a bit of a hit over the last 5 earnings report. I personally feel a lot more confident about it when I look at things. But will this time be different? Because there's no guarantee it will.
Yeah, it's true, because past few earnings disappointed markets and we saw stock declining. And I just took a look at the chart before the recording, and Nike stock is already down like 60% from all-time highs, and it fell another 8% in March so far. So if Nike can beat expectations, that would finally, hopefully stabilize some things. But if they disappoint again, we might see another drop. So it hasn't been the best time to be Nike investor. And looking at market expectations for this report, options are actually pricing in a big move, about 8% in either direction after the report. So with Nike currently trading at $73 per share, that means that we could see a swing of around $6 up or down, depending on results. And that's a lot of volatility, I would say. It shows just how much uncertainty there is around this earnings call. So Nike leadership is under some pressure. They have this new CEO, we could still call him a new CEO, Elliot Hill, who has been with Nike before for 30 years. So he knows company inside out, and he started to implement some changes, bring company back to its roots, like focusing more on sports and brand momentum. But, it takes some time from bringing the changes and showing the results in the report, right? So I would more focus on what he's going to say in the report, and for Nike to avoid another stock drop, they need to deliver in few key areas. I would say that first, revenue needs to be better than expected because analysts are predicting 10% drop. So if Nike can show a stronger than expected revenue, that could be a huge win. And another point to focus on are profit margins, of course, because there are rising costs, which are a problem for the company. And if they can show that they're managing those well, investors might breathe just a bit easier. And then the final topic is, of course, guidance. Because even if this quarter isn't great, if they say that they are expecting better results in the future, that could turn things around just a little bit. So if we check those boxes, we can see a positive reactions. But if they miss in any of those key areas, we might see a more sluggish reaction again. And beyond earnings, of course, tariffs. I think that tariffs, if they comment on tariffs, that would be a game changer, especially if they are managing them well or they have a plan for it. Of course, not all of the things that they're producing are coming from China. Actually, 50% of all things that they make are from Vietnam. So even though the China tariffs are doubling for imports like in the US, they might not feel as much pressure as we would expect. So I'm sure that market will focus on all these things after reporting tomorrow.
Yeah, it's going to be a really interesting one for Nike, that's for sure. It's a stock that we've spoken about a fair bit on the podcast, isn't it? And it's not really done us any favors. I think we're all fans of Nike on here. Look, it's really interesting because it's such a great business, and it comes at a time when I think sport is probably booming, right? Run clubs, we've spoken about that a fair bit, but then also at the same time, your competition is heating up. On Cloud, Hoka, you can go on and go into all the other sort of, brand names, right? Lululemon, right? All these big sort of brand names that are doing really, really well. And it just seems to be struggling, right? Really seems to be struggling, from a perspective of athletic wear, shoes. Like you say, Elliot Hill sort of trying to go back to roots, focus on sports, really important. Sam, you've mentioned it a few times, losing some sort of really, really key sports stars at the same time is also massive for the business. That's going back to their roots, right? Like, it's kind of basically what the whole brand is built on. If you haven't read it, in terms of Shoe Dog and Phil Knight, the idea is going to go and get those sports stars and having them wear the shoes and the gear, that is where they come from. But it's got backing, hasn't it? Bill Ackman just took out a massive position recently as well. So clearly he's one of the most famous and best fund managers in the world. So he's got the backing there. They had that partnership with Skims, and all of that has been pretty positive. But at the same time, the overhang of China, the overhang of tariffs, and slowing profit margins because of those costs going up, as you say, a bit of overhang for the stock in the short term.
Yeah, we'll keep an eye on it. It's quite interesting. Just looking at the gear and the clothes coming out from Nike, I think it's actually the best it's been in a while. But it's interesting as well, Josh, you mentioned just about those big sports stars. And back in December, I was in a tennis shop in Tennington where I live, and the guy we were just talking about Nike, because Nike have taken a big step back from tennis, which is fair enough, and golf too. But obviously they have lost Tiger Woods and Roger Federer, two of the biggest sports stars in the world and the world has ever seen. But he was talking about how, obviously, with Michael Jordan, the amount of money he's made through Jordan and Nike, etc., they sort of gave him that lifetime contract. But when he signed it originally, I think it was favourable for Nike as well. Whereas and this guy was saying, if Federer had stayed with Nike, he would have bankrupted the company if he had gone on that same trajectory after retirement, just because the way the deal worked. So Nike kind of had no choice. It was like, get rid of Roger Federer or we're going to go bankrupt. I'm not entirely sure if this is completely true, but he sounded like he knew what he was on about. So if anyone can confirm this, please do let me know. In the same situation with Tiger Woods for Nike as well, hence why he's now gone and set up Sunday Red. But losing those two icons was tough to take for Nike, but maybe the best decision they could possibly do.
Yeah, they had to make some changes to adapt to the new environment. But for me as well, I really like the new feeds that they're putting out there, and a collaboration with Skims. I think that could be huge, because Skims themselves, they have a great products, at least from my experience, and collab is something that I'm looking forward to. But something else that investors sometimes focus on when trying to figure out where a market is going is inflows and outflows. And for example, if there is a big inflow to the market, it can be seen like people are buying the dip and starting to feel more confident, even though the environment might not be as positive. So can you tell us some more about inflows and outflows, and what do they tell us as investors?
Yeah, well, I wanted to talk about this because I saw a post on Monday talking about what happened in the markets last week. And it's from Bank of America, GWIM, Global Wealth and Investment Management, which said it was the third largest weekly inflow to equities ever. So I saw that headline, I was like, wow, I mean, that's pretty big news. And then when you go look back at the two previous highest, I mean, it was the third, it's not one or two, but number one and two were January 2021. So if anyone's looking at their charts while listening or watching this, if you go look back at January 2021, it was pretty much the low for the market at that time, and the market rallied to December later that year, roughly 35% gain. Literally big week of inflows for equity markets. S&P pushes higher pretty much straight away, and the next one was September 2022. And you know, September, 2022, as we know, is a bad year for markets. I mean, it started bad. Actually, end of October, November, December weren't too bad, actually. But the market bottomed in September 2022 or beginning of October, give or take, and went on 70% to our recent all-time high. So reading into that, you're kind of like, well, the last time we had, the first and second biggest week of inflows from the Bank of America's Global Wealth and Investment Management, the market rallied. So it got me thinking, is that going to happen? Is this a positive move for the market here? Of course, it could just be that it isn't. It could be that over the next 2 weeks we find out some more negative headlines and the market just has to go lower. The S&P 500 currently dropped that 10% in a correction. But I think this is, positive. And when you look at the seasonality of the S&P 500 as well, things generally start to get better from literally about a week ago. So now suddenly you get seasonality on your side. You get some big inflows as well. And, you're considering market momentum. Okay, maybe we can have another headline. Maybe it's something from the Fed that helps as well. But this, could help sentiment there, could help risk appetite too, more liquidity. Yeah, I don't know. I feel like it's a positive, and we'll look back at it and be like, okay, things were showing signs that they were about to get better. However, it can't be the be all and end all, Josh, can it? You've always got to take these things with a little bit of pinch of salt, but I see it positively.
Yeah, no, and it's interesting when you're sort of talking there, saying about the second or the first and the second time previous to that were sort of market bottoms. Almost. I was having a conversation with a client at the weekend, and he just basically was like, what's going to happen next? And I was like, well, it's $1 million question. I was like, I've got absolutely no idea. I'd love to tell you I do, but I don't. And I was like, anyone that tells you that they do is probably lying. But clearly, people over the Bank of America's Global Wealth and Investment Management Group clearly do know. Because they've picked the bottom a couple of times. So look, it's interesting, right? When you've obviously got these high net worth, players, industry players, there's a lot of money flying about, and these guys sort of kind of know what they're doing. But is it a sign? Look, I think it's definitely a sign of market confidence. And I think we've seen that over the last couple of years, right? That when there has been dips, when there has been corrections, they've been bought. And I think that goes back to the point that we made about Jerome Powell, right? The US economy is in pretty good stead. The recession word has been thrown around a few times in the last couple of weeks, but I think the confidence of having the third largest inflows in however long is pretty positive. And our US analyst Brett Kenwell, he sort of wrote something about a few weeks ago about sort of market sentiment over in the US, and it's sort of being just ridiculously low, and that's often then another indicator of a market bottom, right? If everyone's this bearish, who's left to sort of be bearish, right? So I think that's also a positive in that sense as well. So look, I think two interesting signs there. If we're getting inflows in, that's definitely a positive. And there was inflows into crypto ETFs as well last week, after weeks and weeks of outflows as well. So clearly there's a little bit of positivity coming back in after these big sell-offs. And as I say, I think we probably will continue to see sell-offs being bought up.
Yeah, it's good to see some positive signs, I would say. But of course, I always tell everyone that not to look at any indicator in isolation, because it's always a combination of more things happening that we see a bottom or better performance on a short term. So it's definitely a good sign that we see some positivity and inflows and more confidence, but that's not everything that we need currently for a turnaround. But yeah, it's a positive sign. And let's just have fingers crossed that it continues like that.
Yeah, it's one piece of the puzzle, isn't it? One piece of the puzzle, one day at a time, one session at a time. Jerome Powell, do not mess this up later on for us. We'll wrap it there. Good luck to Jerome and the gang if you're listening. Nezha and Josh, I'll see you both next week. Thank you for joining.
See ya.
Thank you.